The offering I've made is we are prepared to take a direct approach to provide regulatory relief to an entity wanting to come in and disrupt this market.
Finance Minister Nicola Willis. So how can you get the economy to grow faster?
Well, first of all, we have to set the conditions in which businesses are confident about investing, creating new jobs, taking on new markets, selling new products. That starts with getting inflation under control. Good news, it's back and banned. Then we need to see interest rates dropping, so borrowing's more affordable. That's on its way. The next step is setting business conditions that build confidence, and that's why we're at work on the education system, on science and innovation. That's why we're building the infrastructure pipeline, why we're driving overseas investment and trade, and while we're working very hard to reduce compliance burdens and regulatory burdens across the board.
Quite a bit of that stuff's going to take a long time, right? It's not. So, I mean, I noticed too there's been quite an emphasis on tourism. Is that one of the short-term levers the government sees where you can maybe just give growth a bit more of a pick-up?
Yeah, just to pick up on the first part of that question, yes, some of the reforms that New Zealand is overdue to have do take a little while to implement, but that doesn't mean we shouldn't do them. In fact, my critique would be that in recent years there's been such a focus on the sugar hit that there hasn't been a focus on the underlying drivers of what has been extraordinarily low productivity. So we're a government that's grappling with those issues. In the short term, there's some obvious areas where we can grow the economy at pace. So tourism matters because it's currently below the levels it's got to historically. And if we get tourism numbers up, that's national income, that supports jobs and incomes here at home, and it's an obvious area where we know we've done it in the past, we can do it again. Similarly with the area of bringing in people on digital nomad visas and encouraging people to come in as investors, those are areas where we can get cash into the economy now and where our settings have been found wanting.
But in tourism, for instance, you're not seeing that as if you like, the pathway to higher paid jobs, are you? Because, I mean, tourism, hospitality tends to have lower paid jobs.
Well, it's to really address the immediate problem, which is that many New Zealanders are worried about the fact that they can't get a job. We have had rising unemployment, so actually tourism supports more jobs. And ultimately, when tourism operators are doing better, when our accommodation providers, our restaurants, our cafes are doing better, they're in a better position to pay their workers more. So it does support that. But of course, as you point out, that is accompanied by longer term reforms designed to address the underlying issues which have plagued New Zealand's economy, from slow delivery of infrastructure, very cumbersome consent processes, challenges to competition. We've seen massive consolidation in major industries, which has meant that consumers are paying the price with higher prices, and we're not getting the innovation that we'd like to see.
Well, talking about innovation and sort of on science, research and development, I mean, Sir Peter Gluckman this week talked about how New Zealand just lags well behind most other developed countries in terms of how much government spending there is on R&D, and that clearly drives productivity growth. Do you accept that? And within the budget constraints, do you have plans to up that investment?
Well, of course, the New Zealand government does invest pretty significantly in the science system in two ways: directly through our support of universities and Crown research, which we're now consolidating into more commercial-focused entities, but also through the research and development tax credit, which is pretty significant. When you look at the graphs comparing government and private sector spend, where New Zealand really is lagging down the bottom is that our firms don't invest as much in science and technology and innovation as their counterparts overseas. So that's part of the issue that we are looking at, is what does it take to connect our government-funded science system better with private firms so they face good incentives to invest in their own technology. And it's also why I've said, look, let's consider the tax settings and where they are, because I want New Zealand businesses to feel good about investing in new machinery, new technology, new ways of doing things, because when they do that, it supports activity in the economy today, but also supports the greater productivity that leads to a higher wage economy, and it's critically important we address that.
And you've raised that point, I think, in a number of recent interviews and speeches, which has kind of raised expectations among some people that you may be looking at the company tax rate. Is it that, or are you looking at the way you could provide some sort of tax and incentives breaks or what have you for investment in the sorts of things you've been talking about?
Well, obviously budget decisions are yet to be taken, and so Cabinet is yet to make the decisions. What I've been pointing out is, even if you just look at the headline corporate rate, New Zealand has fallen behind by that measure. But of course, underneath the corporate rate, as you point out, there are all sorts of other measures in terms of the way that our tax settings work. My focus, as I say, is I want to see New Zealand businesses and those thinking about investing here from offshore to see good reasons to invest in the things that we know will drive New Zealand's long-term productivity and wage growth. And that's about capital intensity in our firms. It's about investing in machinery, in technology, and the new things that would allow firms to produce more with the same resources.
But how constrained are you in looking at those sorts of things, given the state of government finances and your push to get back into surplus?
Well, those constraints remain, but a good finance minister should always be looking across the whole gambit of government spending and saying, what are the things that we should be investing in right now and for the future that will best support our goal to both have New Zealanders in work, but also ensure that their cost of living is eased, which for me comes down to two things. One, price pressure, and two, making sure that we're growing wages. And so in thinking about my budget, I'm not going to constrain myself to saying we're not going to think about anything in terms of productivity or capital intensity because times are tight. Actually, we owe it to New Zealanders more than ever to be contemplating those questions.
Well, I guess from a budget perspective, and if I put it this way, and you're looking at your growth agenda and trying to lift productivity, where would you see the priorities where you would look first to make it, whether it's an investment or whether it's a tax break? Which things stand out?
Well, I think that, we don't achieve it all in one budget is the first thing I'd say. We need to look across successive budgets to see what's achievable. But also in my budget, I've been clear that focusing investment into our education system is absolutely crucial. We need money going to the front line of our schools, continuing to increase investment into our health system so that it can keep up with the needs of New Zealanders. That's critical. Increasing investment in our defence system, where clearly we are living in a less strategically benign world than we once were, and New Zealand needs to equip itself for those challenges. So there are a number of pressures on the budget, as there always are. But what this government has shown is a willingness to root out areas of expenditure across government that, while well intended at the time, aren't generating enough value and impact for New Zealanders to justify being continued into the future. And it's a way up. We do have to say, do we want to be investing money in that thing that was well intended and is maybe going okay, but actually those dollars elsewhere could deliver huge gains for New Zealanders, whether that's in our schools or whether that's changes in the tax settings that would encourage more investment.